Top three things in my notebook this morning. Number one, the 10-year bond yield. Number two, the price of oil. And then number three, Italy, or the greater construct of Italian equities overall. Number one on the 10-year bond yield, it could be number 1, 2, and 3 every single day now for the last 10 days or the last really couple weeks. Since the 10-year bond yield has broken our tail risk line, that's our signal line, our long-term tail risk line of 261, you've created a lot of constipation in the bond market and people trying to adjust their view that there's going to be some semblance of 3 to 4% growth in 2013, or 2014 rather, because that's what we had in 2013. But again, that's not happening. So again, just look at the market signal for what it is. You come in this morning, the 10-year bond yield has no bid. In other words, bonds are going higher. And again, we think that the bond market could actually go a lot higher, 2.2, 2.3 by sometime this summer, when everybody on Wall Street has to cut their growth estimates for both the third and the fourth quarter. Secondly, price of oil, that's definitely going to help that. Don't forget, it's going to help slow growth. Again, you're going to help slow growth. Today we show on the chart of the day the all-time high in U.S. rents, which is not oil, but if you throw a little oil, little food, little rent, what you get is a really nasty situation. So again, we've done a lot of work on this, obviously, and oil breaking out not only last week. WTI was up 2.3% last week, but it's up another 0.6% this morning. WTI looks like it could easily go to 110 this summer, in as much as Brent could go to 120. So again, that would pose a lot of problems for consumption growth, which we remain bearish of in consumer stock terms. Finally, Italy, it's ex-dividend day, so people are going to say, well, it's down because of ex-dividend, but they wouldn't have told you to sell it last week because it was going to be ex-dividend. Whatever. The point is that the market's down. So again, Italy's losing its momentum. Italy's gains for the year to date, which were up about 15% for the year to date, have now been cut in half. Why do I care about that? Because Italy was one of the leaders, and as we've been saying, leaders are lagging. So again, if you look at Greece, which has done a full, basically a full turnaround here, Greece is now down for the year to date after chasing to the highs earlier in the year. Greece was down 9% last week. I mean, it's up 2% this morning, but who cares? What's happening now is you're seeing the leaders lag in Europe. And again, I do think that Europeans are selling in May and going away. So again, if you don't want to do that in the U.S., that's fine. You're going to lose money doing it. We think that that's the ongoing call. Again, last week the Russell was down again. The Russell's down 8.8% since March. And people might want to say, well, now everyone's coming to your view on inflation accelerating, slowing growth. But again, we think that this can last well into the summertime. So again, I wouldn't be getting too cute buying the dip this morning either. And those are your top three things.